Well, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Canada. This currency pair is an interesting one because there are two dynamics in play today for it. One is the stronger U.S. dollar. We saw better data come out of jobless claims, GDP, durable goods orders. Even the trade deficit was better than expectations, and that has pushed the dollar up against a lot of the major currency pairs. The other thing is it's also pushed up the price of oil. Oil prices moved up to above the $80 level to $80.24, and trading here today is currently trading right at the $80 level. That's the first time since I think April of 2023. So and a key natural resistance level, a natural target on the top side that if we break above, we could see further momentum to the upside. Now, the higher oil prices tend to weaken the dollar versus Canada. Why? Because the Canadian dollar gets bid as a result of the stronger oil prices. But we are seeing the Canadian dollar actually lower on the day, but it's well off the lows as a result of the stronger U.S. dollar buying, but it is still contained, certainly compared against some of the other currency pairs where we have like the euro versus U.S. dollar trading to new lows, this pound versus U.S. dollar going down, the dollar versus yen moving to new highs and trading here today as well. So all those things, all those currency pairs are moving to the upside in favor of the U.S. dollar, but the dollar versus Canada, although it's higher, is still below the closing level from yesterday's trade. So taking a look at the technicals, what can we say? Well, what we know is that the price has been trading in a fairly narrow trading range over the last 3 or so trading weeks. I put a red box here that outlines most of the trading action. On the top side, we have a lot of ceiling highs that come in between around this area right through here with the 1.3230 level up to the 1.32418 level as a ceiling area, and you can see the number of different times that the price has gone up to that level. On the downside here, we do have a number of different lows and highs, I guess, through here where we found as a swing area for this currency pair and trading this week. The low price this week approached that lower area and found support buyers. So most of the price action is in here. Yes, we did move below it here and here, but let's ignore those as extremes on the downside. And by the way, the price has seen higher highs. So there is a bias more to the upside in this currency pair over the last few weeks of trading as well, and the low price in trading here today held above that trend line before moving to the upside. Now, we are also above the 100 and 200 hour moving averages. That's the blue and green lines in these charts, and those levels come in at 131.82 up to 131.896. As long as the price is able to stay above those levels, the bias remains more to the upside for this currency pair. In between this high right here and the 100 and 200 is this swing area through here. And if you blur your eyes a little bit and look at the different swing lows and swing highs through here, you can see that there's again another area where there's price action around this level. That tells me something, and it tells me that if the price were to move above this level, then we're going to be moving, the bias is going to increase to the upside. So there's a lot of different arrows as you see in here, or little triangles that look like triangles. They all take them off. But that is indicative of a non-trending market, a market that's moving up and down, up and down. So taking the clearer picture right here, what we know is that if we get above this area between the 130.199 up to 132.08, the bias increases more to the upside, and we'll look toward these high levels up to 132.30 up to 132.418. The 50% retracement of this move down is also in that area right here at the 132.39 level. That's of this move down from here to here. Conversely, if the price were to move back below the 100 and 200 hour moving average, all bets are off as the buyers fail, the momentum cannot be established, we can't get out of that red box, so on and so forth, and the bias shifts back below those moving average levels. So that's the way I see this currency pair. It's not a pretty chart. Lots of ups and downs, lots of counterbalancing fundamentals also in play. So if you like it, trade it. If you don't like it, don't trade it. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.